Buyout firm KKR is looking to ink another big energy deal. The buyout firm, run by Henry Kravis and George Roberts, may buy a $400 million stake in Texas Shale from Hilcorp Energy. Bloomberg's Cristina Alesci broke the story. She is here now to break it down for us at the deal desk. So, Cristina, congratulations on the scoop. It's a good one. So this essentially proves this is the hottest area right now in energy right now, is it not, these shale projects?
Certainly, there's been a large portion of foreign corporations getting into this area, like BP, as you mentioned before, and Reliance Energy, India's
also
biggest
Total.
Total as well. So we have a lot of foreign players coming in and making this bet. But Eagle Ford is actually interesting for two reasons. It's got this natural gas component, but also it has the heavy liquid. So companies have been drilling for oil there. So the thinking for KKR is, okay, we can get the oil out of the ground now, and then when prices for natural gas recover, we can take advantage of that as well.
Some people see Eagle Ford as a less mature opportunity than maybe some other ones out there. Do you think this fits into the strategy of what KKR is doing?
Yeah, I mean, it's not really typical for private equity firms to be taking this kind of a bet. In essence, what I'm trying to say is that they usually go into businesses that are very developed. They have very strong cash flows. This is more of an experimental play. They're hoping to find, they're hoping that the natural gas prices recover, and they're hoping that the extraction methods will be, profitable in the long term. So this is really an experimental play for them.
And for people who don't know, I mean, the best way to describe this kind of shale activity is that it's fuel that's actually trapped in shale formation, coal beds, in penetrable normally sandstone rock.
Yeah, up until the 1990s, it really wasn't economical to pull out of the ground because technology hadn't really developed to take advantage of that.
But in this case, Hilcorp, just one of the companies that probably needs more capital, and thus this deviation from what you're calling a standard pattern. In other words, they need a cash infusion to be able to do this.
Hilcorp doesn't need a cash infusion to be healthy, but it does need cash to do the development. So you're absolutely right. I mean, it does need money to go out there and do the exploration and development that they want to do.
Now, overall, just put it in context for KKR's energy deals, because this is just one of a step that we've seen going back a few years.
Yeah, I mean, KKR has been involved in energy since the mid-'80s, so they definitely had a footprint there. What's different again about this deal is that there's an exploration component there. So it's less focused on cash flow and more focused on sort of experimental deals.
All right, and the next step, Cristina, we know you're hot on the trail. What's the next likely headline that you're going to break for us?
Hopefully we'll have a big private equity story tomorrow.
All right. Well, we'll look forward to that. So again, just to repeat the headlines here, KKR, the buyout firm run by Kravis and Roberts, may be acquiring $400 million of shale assets, brought to us here by Cristina Alesci. Thanks very much, Cristina.